the tax one, I think, is very, very important. And I think people have to work out what their government expects from them. And if you haven't created an Excel for your catalog of items, whether they're your previous activity or what you're holding on to, I strongly suggest everybody do it. It took me ages to do up my one, but you really need to know what you've done. You have to go through your transaction history. So if you bought something for 20 gems, it's not worth selling it for 26, you know what I mean, or 28 to clear the commissions, and make 6 gems and have to spend so much of your time creating that entry, because that entry needs to be recorded. Now, I know a lot of people think that it doesn't, but it does. And I think from my understanding, and as always, do your own research, but in America, every single entry, regardless of its value, has to be recorded. In Australia, it's above $500, which is roughly 380 gems. But here, and this is another important reason why I've said this, the gem has to be stable. So for our tax department, that value is determined. So you have to equivalent that to the US cost. That gem has to be constant. And this is where, Veve is going to get caught inside these requirements, because that gem has to always equal $1. Otherwise, the whole of the Australian, the rules for the Australian tax don't work out, because it says 500 Australian dollars. So what is that in gems if it's variable?
Yeah. So talking about tax, I was going to save that section for later on, but since you mentioned it, I think your most recent video is the video that everybody has to watch, because you talked about a really interesting point, which is the fact that usually when we think about taxes, we think of tax as the percentage of profit, right? But then now the Veve situation is so interesting, and I have some notes here, so I'm just going to read from my notes because that'll be easier. You can buy an NFT off app for 2,000 US. Let's say that I pay you 2,000 USDT, and then you transfer a collectible, like the Todd Batman, right? For me, when collectible transfer was still available. And let's say that Todd goes to 10K, like 10,000 gems, like it did at one point, it went to 14,000. And when I sell the Todd for 10,000 gems, hypothetically, let's just say that I can cash out $10,000 in profit. Then if I'm in a 25% tax bracket, I'm paying $2,500 in taxes, right? Because my cost is zero, because on Veve's system, because you transfer the Todd to me, a cost is zero, right?
Yes.
When in fact, if I were to factor in the original $2,000 of cost that I transfer to you off the app, then my profit would have been $8,000. Then I would be paying $2,000 in tax instead of $2,500. And
anytime you transfer in, you're going to have to be able to prove that. So this is where I think people are going to get into areas they're not expecting. So if you've bought that through some arrangement, through some group, you have to prove that, because that's how tax works. What did you pay for it? What did you sell for it? That's the basic principle of capital gains. You take off any cost, which in this case is commissions, and the difference is taxable. So in America, the main differentiation is whether you've held that NFT for a year. If you've held it for under a year, it goes onto your personal income tax. If you've held it for over a year, it's a flat 28%, right? But being able to prove what you paid for that, you just can't go into the ATO and say, the IRS in America, and say, I bought it off Dave for 2,000. I'm like, well, who the hell's Dave? You're like, he's in the chat. I text him, and this guy, he escrowed it. I'm like, well, who the hell's that? Who's the other guy? Who's the middle guy? This is where it's going to get really, really funky if people don't stop and think. And what I mentioned in the video is, and this is where people have to just take a second. And, you know, I'm not the devil. I'm not creating these tax rules. They are there. If you want to flout them and do nothing, then so be it. But just remember what Veve is a big database. All your information is recorded, and that's what your local tax department may eventually be looking at. They may know every single transaction, and they'll look at that and say zero transfer in. Right now, if you choose not to populate those forms on your tax return, then you could imagine if you're in quite an advanced tax system, you'll get a knock eventually on your door saying, mate, you haven't paid your taxes and we're going back over 3 years. And, you know, if you've got that situation, and it's even worse when it's much closer, like just say you paid $5,000 for something that you sold for $8,000, but you transferred that in, right? So it was worth, say, 6.5, and you paid, you know, say 5,000 USDT. Now you physically paid that. And that may be from a wallet that you have online that the government knows about it, and it shows an account, you know, payment going out, a transfer going out. But you can't prove that that transfer going out was for that item. There's no connection between the two. This is where you need the paperwork to be able to say, no, that was for the purchase. You need to be able to go and get a receipt from the party that you purchased from. Now, that party is going to 99.9% be anonymous. They're not going to give you a receipt for what they sold it for, because otherwise they're up for capital gains on what they've done. So this is where you're going to get left holding the bag. And if you've paid a lot and then you've only sold it for a small margin and it's an expensive item, like in that case, where you've paid $5,000 and you've sold for 8,000, you only made, you know, 2,000 gems. But when the tax department looks at it, it looks like you've made 8,000 gems.
Yeah.
All of a sudden, you're at a loss because of tax.
Yeah, I think you are doing a great job by putting the formal perspective into a very informal space, simply because if we think about the demographic of NFT and Veve users, people come from the physical collecting background, which you mostly collect and you don't really sell, right? So you collect comic books or toys or whatever, and you don't think so much about selling. And people come from the NFT space, which can be all over the place. But at the same time, we need to also think about the fact that Veve is a partner of Disney and DC Comics and Universal. And those companies, Coca-Cola even, and USPS, they would not want to work with a partner that has problems with the IRS or, you know, some investigation related to taxes, right? And because
100%.
Veve is a centralized system, they track every single transaction and, you know, on the blockchain as well. So that makes it even more complicated and interesting and necessary to think about, that many people haven't thought about.
And look, one of its partners is the USPS. You know, it is going to be aligned with the government. If you want to go down to your local collectible store or to, you know, a swap meet, and you want to buy a physical Todd, you want to pay cash for it, you want to pay, you know, any sort of crypto coin for it, and they'll take that. That's awesome. You can buy that. And you know what? Nobody's going to know you bought that or when you sell that, right? But that's not what Veve is. Veve is a financial market. So when you buy that, it says, you know, a whole bunch of zeros and ones that equates to your account. It goes from account A to account B. Now, at the moment, not all accounts are known. You know, pretty much no accounts are known. So if you're account A, you're going to get known when you go to KYC. If you want money out of account A, that's where you have to attach it to your name. So, okay, Will owns this, right? Then the government says, okay, well, that has to be connected to Will's tax return. Now, just say you have 5 accounts because you were trying to get multiple drops or whatever. There's no difference to the government as to whether you're buying or transferring from yourself or transferring from another nefarious unknown party, right? So it just looks at that one account. So I'm telling people maybe some of their smaller accounts, they might have to work out a strategy of how to get out of that position that they created, because they could have a lot of very much one-sided accounts or transfers on those accounts, and they may not be worth it, worth, you know, bringing into the KYC side of it. And then they have to work out how to get around that. And, you know, I'm not proposing strategies for that, but it's just, people need to look at the records and say, well, what's there? And if you've traded your way up to a few big items, and, you know, let's take the Rizzo, for example, and you've sold one Rizzo, you transferred in, you clear at $8,000 tax, and you're adding that onto your personal tax this year. You know, look, I think the other important consideration for people to think about is, at the moment with NTL, there is no actual validation of that $1 US, right? Because you can't cash that in. So there might be a period where, like a grace period, where you could say, you know, in Australia, where our financial year finishes 30th of June. So, I mean, if MTL is not in by 30th of June, you probably don't have reporting obligations as yet. They'll still always be there, but you can't physically cash that gem in for anything at the moment. So I don't know, people need to look at their own situations, but yeah, they might look at some accounts and go, oh my goodness, if this guy's right, I'm going to be up for $12,000 in additional income to my tax return. And I've hardly made anything on that.
Yeah. And then especially you mentioned collectible transfer, and how in the US, at least, you are taxed. I don't remember the exact number, but if you transfer like something that is worth more than $5,000, I don't know if it's $5,000 or something like that.
Yeah, it is.
And that is a donation, and I get taxed, right?
Yeah. So, yeah. Like I said in the video, this has a historical reason for all these really strict rules with collectibles. And that was, you know, rich people and big businesses were, you know, buying a vase for $50,000 and selling it for $500 and claiming capital loss and not paying $49,000 on their other taxes. They could sell it to their wife, sell it to their brother, whatever. So the government cracked down on it and said, no, we're not happy with this the behavior in these collectible markets. This is when it was a physical market. So they have these rules now, so that if you had a $50,000 vase in your house and you give that to another party, that party has to be a registered charity to be able to have that $50,000. Well, if you bought that vase for $5,000 and it's worth $50,000, your capital gain is $45,000 on that vase, whether you like it or not. If you give that vase to somebody, that doesn't actually zero out your capital gain, because there was a commercial or non-commercial transaction at that point. Now, if you can prove that it was worth $50,000 and that charity was capable of taking a donation of that sort and using it for its charitable purposes, then you could establish with the government, and you have to go get a value out. It's ridiculous that you don't have to pay that capital gains. If you look at that from an electronic perspective on Veve, you've got something, you've transferred it out because you've got a Bitcoin or a crypto deal done on the side. How does that look on your account? You've transferred out something you're not allowed to transfer. You're not allowed to give it to that person for free, and that's how it looks. So you have to say, oh, hang about, no, I got 1 ETH for that. From who and where's the record? Oh, I transferred out on this day. Well, what's the connection between that transfer and, you know, or that transfer in and this transfer? You need a contract of sale.
Yeah.
This is where I'm just worried people might not be considering, because this, you know, you come into this because you look at it and you like the NFTs. You're not thinking about taxes when you're buying your first Batman. Nobody is. But if you've been getting addicted to it, you've done 10, then 20, and then 40 transactions, and you know you've been wheeling and dealing a little bit, you better stop. Just have a look at where you're at. And I'll say to anybody who's been buying this stuff off market And, sick of hearing me saying it. I don't need to keep saying it. I've got friends who do this sort of stuff. I'm not trying to be a judgmental sort of person. I'm just trying to say, guys, be careful. Go and ask that person for a receipt. If you can't get a receipt off them now, you ain't going to be able to get a receipt off them when you're doing a tax audit. Do you know what I mean? And if I'm not issuing a receipt, then consider what you're doing.
Yeah. And I think the fact that Veve didn't have that technical resource to build out, because if you remember, for a few months last year, they had to close the marketplace. So many transactions happened off the app, right? And then now cash out hasn't been implemented for so long. I think that they acknowledge the off-app transactions. They don't encourage nor discourage it. So off-app transactions now looks like a band-aid. But to your point, that band-aid can make your wound worse if you don't take it seriously, right? If from that perspective.